Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, January the 30th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we are here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Not really a whole lot of really important economic data across the pond, but coming over here to the United States, we got ADP non-farm payroll change came in at 213,000, expected to be 280,000. They revised last month's number down from 271,000 to 263,000. So revision to the downside, almost a wash to the to this number here. Maybe still pretty good actually. Now that I dig into that number, it's still positive by about 20,000, so that's good. And then we also got pending home sales, which came in at negative 2.2%, expected to be a positive 0.8%, and they revised last month's number down from 0.7% to negative 0.9%. So all of these numbers, we're seeing these pending home sales, okay? The pending home sales are coming off. Why is that? The reason is as interest rates start to increase, the people that are out there shopping for a home realize that when the interest rates start increasing, they can afford less of a home. People that are going out there and ready to sell their home realize that, you know, if they were in the market to possibly sell that in the last 6 months to a year, maybe or more, you know, people keep an eye on how much their house is worth. They're seeing that value of their house kind of precipitously downtick a little bit as those interest rates go up. Therefore, they aren't as eager to put their house on the market. So we're maybe seeing some of those levers and pulleys finally pull through the entire market. When we first start seeing interest rates increase, we see that affect the buyer. But now we could be seeing that start to affect the seller as they don't get as much for their house as they really want. So pending home sales down. I haven't gotten crude oil inventories yet because I'm shooting this video a little bit earlier because today is another day of jury duty and I need to get this done before I head off to do that. So I haven't been able to do any earnings trades. I did look at eBay on my lunch break yesterday, but because it's such a low price stock, I wasn't able to really get anything for like the puts that were just slightly out of the money. So I was only getting about 30 cents for it. And for that risk with eBay that I took the last time, I didn't want to settle for only 30 cents this time. So I just passed on it. All right, let's talk about crude oil. It is moving higher, and it's actually moved higher throughout this past week since our last crude oil inventories number, which was a pretty major build. If you guys remember, I think it was like an 8 million barrel build over the expected, which was a drawdown. So that being said, you know, we saw a big move higher. We also, one thing I have to note is the FOMC meeting later on today. So that is going to give our final rates for the FOMC. They are expected to leave rates unchanged at 2.5%. You know, nothing really to see there. Maybe some of the rhetoric coming out of the minutes or something like that, but that's about it. I think that they're just going to say the conditions are that we need to hold off and kind of let this all digest is really what I think it's going to boil down to. And then we've got gold futures continuing their trudge higher again today, testing that value area high, which really lines up with the Fibonacci there, and that is going to act as resistance. I think this is a little overdone. We've had a pretty big rally the last few days. FOMC, especially today, comes out and says that they're going to leave rates unchanged. I think we could see this come off. I don't think that that's going to be a catalyst as an inflationary type scenario where that really drives gold higher. That's usually the big catalyst that pushes gold higher is when we see inflation, and we're not really seeing inflation despite the fact that we have the tariffs and everything else going on. All right, bonds unchanged. Going to be a wait and see game today, really, on what they say after the meeting. People are going to be digging into that to see if there's any nuances that have changed in that meeting. So bonds, I think, are going to be a bit on hold. I don't see any major move, a point here or there before that meeting. They announce what they're doing with interest rates in that meeting, I guess I should say. Okay, VIX pretty much unchanged. Equities are higher on the day, so you would kind of expect VIX to come off a little bit, but with the FOMC, that binary event going on, that is going to kind of hold up that volatility coefficient because of this unforeseen nature in and around the FOMC. Yeah, we believe that they're going to do nothing and leave rates unchanged and maybe come out and say a couple of different things. Everybody's speculating on that. But at the end of the day, with interest rates really not moving, the overall market's reacting appropriately. Dow Jones up over 300 or up over 200 points right now. But right now the key is that it is up above this Fibonacci extension and could act as support. Although because it lines up so closely to the point of control, it diminishes that strength of it being a support resistance because the market is always wanting to pull back to the point of control. So it might not be acting exactly the way we would expect for normal support and resistances in and around Fibonacci. We've got the NASDAQ moving higher today by about 83 after yesterday's big sell-off. When we were talking yesterday, NASDAQ was down big, but we did get that late day rally, which shows strength going into the day. And I think that's a very important thing to note, especially when people are talking bearish tones and bullish tones and stuff like that. That is a very bullish undertone when you see those late day rallies pushing higher. And then we move over to the E-mini S&Ps. They're up on the day, albeit not as much as the NASDAQ necessarily, but up on the day nicely. Again, it's got overhead resistance with these Fibonacci's, the Fibonacci extensions and the just regular Fibonacci's. That is all going to act as resistance. You can see it's acted as resistance a couple of times before this week already. Again today, bumping up against that and really not able to pierce it. We need a catalyst to get us to move a little bit higher, get above these Fibonacci levels, and then we'll be right there at that point of control. We'll see volatility start to come out and be right in line with my thesis. All right, we'll look at the daily chart of the E-mini S&Ps. Each blue section is a day section. Each candle is a 30-minute chart. You can see overnight inventory tried to get short. This is what I was talking about the other day when we were talking about big moves happening in the equities, but we haven't gone anywhere. You can see the last 5 days, even 6 days, we haven't really gone anywhere. We're still within those ranges, even though we've had these big moves back and forth. That's what I've been talking about. Yes, we're having these big moves, but we haven't gone anywhere. And that's pretty important. It's building up in and around that point of control where I've talked about that we should start settling down. Yeah, we're seeing these major gyrations. I've talked about that a few weeks ago, that this is what we might start to see. Major gyrations not going anywhere in and around the point of control. That's really settling the market down. But overnight inventory did get very long today coming in with these economic data points. They got flushed out. It's yet to be seen what we do the rest of the day, but I have a feeling that late in the day, especially heading into the end of the day after the FOMC and everything else, the market's going to start migrating again upward. So I think that the risk is to the upside right now, not necessarily to the downside, despite the fact that, if the FOMC raises rates, then, everything's off the table. But at this point in time, I think that the market is getting very comfortable and we are looking pretty good in and around these areas. So that being said, I haven't been able to add anything. Like I said, I've been at jury duty. I tried to add some eBay yesterday, but the value wasn't there. Looking at a couple of other things, but just don't have the time during the day to really dig into these things. And in the mornings, it's a little crazy. So haven't added anything. Tomorrow's webinar, though, we are going to be doing that. It is on the short call spread. So if you guys want to know how to make fast money in and around these markets, you guys need to start paying attention to my rules, because what I do is I teach you what value is. And when you know value immediately, you can react. If you can react immediately, you are ahead of the curve. And when you're ahead of the curve, you're able to make that money much quicker when the masses start realizing. So I teach you guys just that, how to find value in or around these options. I'll go into more detail today, or actually tomorrow, in that webinar. So check it out at protraderstrategies.com. If you can't take that, take it easy.